When you think of investing legends, names like Warren Buffett or George Soros probably pop in your head, right? But there's another guy, one who completely blew them all out of the water. And he didn't do it with gut feelings or business savvy. He did it with pure, cold, hard math. This is the incredible story of Jim Simons, the man who saw the stock market not as a casino, but as a code just waiting to be cracked.
So let's just start with this number, 66%. For 30 straight years, from 1988 to 2018, Simon's main hedge fund, called Medallion, pulled an average annual returns of 66%. In the world of finance, that number is it's almost unbelievable. It's so far beyond what anyone else has ever done, you'd think it was a typo. It wasn't.
Okay, but what does a 66% return every year actually look like? It's kind of hard to wrap your head around, so let's make it real. Let's say you had $100 back in 1988, and somehow you got it into the Medallion Fund. What do you think that would be worth today?
Yeah, your $100 investment would have mushroomed into nearly $400 million. That's not just beating the market, that's playing an entirely different game on a different planet. And it just shows you the mind-bending power of the system that Simon's built.
So how on earth did he do it? Well, while all the traditional investors were out there having lunch with CEOs and poring over earnings reports, going with their gut, Simons was on a completely different path. He was a quant. He believed the market wasn't about human feelings or stories, but about logical, hidden patterns that you could find if you just had enough data.
And here's the craziest part of the whole story. To find these patterns, he refused to hire anyone from Wall Street, not a single person. Instead, he hired mathematicians, code breakers, physicists, computer scientists, people who, just like him, saw the world not as a mess of human emotion, but as a complex system full of problems just waiting for a solution.
To really understand how Simons thought, you have to rewind and look at his past. See, before he was even thinking about stocks and bonds, he was in the business of secrets. He wasn't just an outsider to finance, he was basically trained in a world of pure code. I mean, this guy's resume is just wild. He was a brilliant mathematician teaching at MIT and Harvard. Then, he was a top-level code breaker for the NSA during the Cold War, cracking Soviet messages. After that, he built a world-class math department from scratch at Stony Brook University. But for him, none of it was enough. At 40 years old, he just walked away from it all to tackle a brand new kind of code, the market.
So what was really driving him? Well, despite all that success in the academic world, his first wife said that Simons always had a different endgame in mind. It wasn't just about solving puzzles for the fun of it. He fundamentally understood that money meant power.
So he set out on this new mission, find the signals that were hidden inside all the noise of the market. He was absolutely convinced that somewhere in that daily chaos of prices going up and down, there had to be predictable patterns. He didn't even care why they were there, only that they existed, and he could find them. Okay, the absolute best way to get what he was doing is with this weather forecasting analogy. To predict tomorrow's weather, right, computers suck in all this data. Temperature, humidity, wind speed. Quantitative finance does the exact same thing, but it uses financial data. It's looking at prices, trading volumes, all of it, to try and predict where the market's going to move next.
The process itself sounds simple, but doing it was insanely hard. Step 1. Get your hands on massive, and I mean massive, amounts of historical data. Step 2. Unleash powerful computers on that data to find tiny, predictive signals that no human could ever possibly see. And step 3, the most important part, let the algorithms make the trades automatically, taking flawed human emotion completely out of the equation.
A huge breakthrough came when one of his partners, a guy named Elwin Berlekamp, completely re-engineered their system. He figured out the secret wasn't about making a few huge correct bets. No, the key was making thousands upon thousands of tiny short-term trades. If you do that, you only need a tiny edge. You only have to be right 51% of the time to make an absolute fortune. Think of it like this. Most investors are like fishermen trying to catch a whale. They're waiting for that one huge win. And in the process, they ignore the thousands of little guppies swimming all around them. Well, Simon's firm, Renaissance Technologies, did the exact opposite. They built a system designed to do nothing but catch those guppies, millions of tiny profitable trades that nobody else even noticed. Now, for years, Renaissance actually stayed away from stocks. They were just too messy, too complex. But Simons knew if he wanted to build a real legacy, he had to conquer the stock market. And right as he was getting ready for that challenge, his professional life collided with an absolutely devastating personal tragedy.
In the middle of this incredibly pivotal moment for his company, Simon's 34-year-old son, Paul, was killed. He was struck by a car while riding his bike. The grief was immense, and it drove Simons to bury himself even deeper in his work.
To finally crack the stock market, Simons hired two computer scientists from IBM, Robert Mercer and Peter Brown. Now, these guys had been working on speech recognition, teaching a computer to predict the next word in a sentence. Well, they took that exact same logic and applied it to the market, building a system to predict the next tiny price move.
And did it work? Oh my gosh. In the year 2000, when the dot-com bubble burst and absolutely wiped out fortunes left and right, the Medallion Fund returned a staggering 98.5%. That proved their model wasn't just a fair-weather system, it could thrive even in the middle of a total market meltdown.
With this kind of unbelievable success came incredible wealth, a culture of intense secrecy, and eventually a deep political divide that started to tear the firm apart right from the top. Life inside Renaissance was like nowhere else. That legendary Medallion Fund, it was totally closed to outsiders. Only employees could invest. Every secret was guarded by ironclad NDAs. The wealth was so concentrated that an entire neighborhood on Long Island, full of employee mansions, got the nickname the Renaissance Riviera.
But at the very top, a huge crack was forming. Jim Simons became a major Democratic donor and was one of Hillary Clinton's biggest financial supporters. At the exact same time, his co-CEO, Robert Mercer, emerged as one of the single biggest financial backers of Donald Trump's 2016 campaign.
Well, the fallout was pretty quick. After the 2016 election, an employee spoke out publicly against Mercer. Then, other investors started to get worried about the firm's public image. When a major pension fund pulled out millions of dollars, the pressure just became too much. In late 2017, Mercer resigned as co-CEO.
After he stepped down from Renaissance, Simons turned his full attention to his final legacy. And just as tragedy had shaped his career once before, a second, unimaginable loss would shape his philanthropy. In 2003, his son Nicholas tragically drowned on a trip to Bali, and this loss would profoundly influence where he directed his vast fortune.
With a personal fortune in the tens of billions of dollars, Simons started giving it away. He gave $500 million back to Stony Brook University. His foundation funds critical autism research, which is a very personal cause for him, and it also supports math and science education. But maybe its biggest ambition is funding research into the very origins of the universe itself. When you look back, Jim Simons' entire life was this relentless hunt for patterns. It started with cracking Cold War codes, then moved to decoding the financial markets, and finally, to trying to understand the fabric of the cosmos. It's a journey that really leaves you with one big question. From decoding markets to decoding the universe, what patterns will be the ones that define our future?